Welcome back. Time now for our ETF Spotlight. The Retail ETF, ticker XRT, just closing out its worst quarter since Q1 of 2020. It's under pressure again this morning, down about 1.5%. Could more pain be ahead? Courtney Reagan joins us now with that story. Hi, Court.
Hi, good morning, Morgan. So the U.S. consumer has been remarkably resilient during the pandemic, but consumer company CEOs are starting to express some concern about what's to come, or maybe what's happening now, and investors are starting to notice and hitting the sell button. So Tempur Sealy CEO Scott Thompson said, quote, recent geopolitical events, falling consumer confidence, and a new COVID variant outbreaks in international markets led to lower than expected sales. RH CEO Gary Friedman was very downbeat on the earnings call, saying higher prices for everything is going to, quote, outrun the consumer, adding that uncertainty from inflation, interest rates, housing, and Russia's invasion of Ukraine makes it the most difficult time for RH to forecast since 2008. Even though the higher-end consumer has remained very strong. The retail ETF, ticker XRT, had its worst quarter since the first quarter of 2020. Well, remember that one well. The iBuy e-commerce ETF had its worst quarter since its inception in 2016. And despite a trend of consistent and largely positive financial results, shares of American Eagle Outfitters and RH hit 52-week lows last week. Home Depot is just about 2% off its 52-week low in a housing market and remodeling market that's been on fire. Meantime, the discounters and wholesale names are taking off. BJ's Wholesale up 20% in a month. Five Below up 12%. Costco and Dollar Tree are up 9%. It's worth mentioning that BJ's, Costco, and Walmart Sam's Club, of course, sell gasoline at a discount for members. A likely draw as gas prices remain elevated and then possible spillover for other purchasing while filling up outside, taking a trip inside too. Morgan.